Did you know that over 90% of cryptocurrency investors lose money? Most people think it's because they chose the wrong coin or didn't get in early enough. But the truth is far deeper and far more uncomfortable. It's not the coins you're picking that are holding you back from crypto wealth. It's the myths you believe. And if you want to break free and finally start seeing real success in crypto, you've got to dismantle the lies that are sabotaging your financial journey. Welcome to Crypto Cortex, the channel that cuts through the hype to give you the raw truth about cryptocurrency, blockchain, and digital wealth. Today's topic, we're going to unpack the 5 biggest myths about cryptocurrency that you need to stop believing. These aren't just misconceptions. They're dangerous beliefs that keep smart people broke. So if you're serious about building wealth through crypto, listen carefully. Let's get into it. Myth number 1. Crypto is easy money. This is the most seductive lie in the game. You've seen the headlines. Guy turns $200 into $2 million with Dogecoin. Teen becomes a millionaire overnight thanks to Shiba Inu. It's easy to assume crypto is a magic money machine. You buy a few coins, wait, and boom, riches. But for every viral success story, there are tens of thousands of people who lost everything chasing that same fantasy. Crypto isn't easy money. It's high risk, high reward. And with great reward comes great responsibility, like doing research, understanding blockchain technology, evaluating projects, and most importantly, managing your own behavior. You don't see the guy who put his life savings into a meme coin and lost it all. You don't hear about the investor who sold at the bottom in a panic, or the one who bought the top because of a Twitter hype. The people who make real, lasting money in crypto aren't lucky. They're strategic. They have systems. They've done the work. They understand what they're buying and why. So no, crypto is not easy money. It's a battlefield. And if you're not prepared, you're going to get wrecked. Myth number 2, if you missed Bitcoin, you're too late. This one is especially common. People. Look at the price of Bitcoin today, tens of thousands of dollars, and think, well, I missed the boat. They say, if only I had bought at $1 or $100 or even $1,000. They treat it like it's already over. Like the opportunity is gone forever. That's not how innovation works. People said the same thing when Bitcoin hit $300, then $1,000, then $10,000. Every time someone said it was too late. But here's the truth. Value grows in waves. Bitcoin and other major cryptocurrencies like Ethereum have gone through multiple cycles. There are highs, crashes, consolidations, and then new highs. Saying it's too late is like saying you shouldn't invest in Apple because you didn't buy in the 90s. It's short-sighted. Even now, crypto is still in its early innings. The infrastructure, the regulation, the global adoption, it's all still unfolding. Projects like Ethereum are building the backbone of decentralized finance, gaming, smart contracts, NFTs, and more. And let's not forget altcoins. New projects are constantly emerging that solve real problems. Some will crash and burn, but a few, they'll 10x, 50x, even 100x. You're not too late. You're early if you're willing to learn and play the long game. Myth number 3, volatility is your enemy. Volatility is scary, no doubt about it. One day your portfolio is up 40%. The next day it's down 60%. It's enough to give anyone a panic attack. And so, most people believe that volatility is a bad thing, something to fear, something that proves crypto is unstable or dangerous. But here's the thing. Volatility is where the money is made. If an asset never moved, there'd be no opportunity. You wouldn't be able to buy low and sell high because prices wouldn't change. Volatility is the price of entry for big returns. It's not your enemy. Your emotions in the face of volatility are your enemy. When prices crash, most people panic and sell at a loss. When prices skyrocket, they FOMO in at the top. Either way, they lose because they're reacting emotionally to volatility instead of preparing for it strategically. Volatility is just noise. It doesn't mean the technology has changed. It doesn't mean the project is suddenly worthless. It just means the market is doing what markets do, shaking out the weak hands. If you can learn to stay calm, stick to your investment thesis, and zoom out, volatility becomes your friend because it gives you chances to buy great assets at a discount. Myth number 4. Elon Musk or anyone controls the market. This myth is sneaky because it's rooted in some truth. Yes, Elon Musk tweets can move the market. So can news headlines, regulations, Reddit threads, and viral TikToks. But here's the key distinction. These things can influence the market. They don't control it. Believing that one person can make or break the entire crypto space gives away your power. It shifts responsibility for your decisions onto someone else, and that's dangerous. Crypto is volatile because it's still a young, emerging asset class. Speculation plays a huge role, and influencers like Elon can stir the pot. But if you build your strategy around chasing what he tweets or what anyone tweets, you're going to lose. Successful investors aren't reactionary. They anticipate, they research, they look past the noise and focus on fundamentals. Use Elon Musk's tweets as signals to understand the mood of the market, but don't let them drive your trades. You're responsible for your own financial future, not some billionaire on Twitter. Myth number 5. I don't need to understand the technology. This is the most overlooked myth, and probably the most dangerous. Too many people invest in crypto without having the faintest idea how blockchain works. They don't know what consensus mechanisms are. They've never read a white paper. They don't understand the difference between a layer 1 and a layer 2 protocol. They just hear a coin is pumping and jump in. Would you invest in a startup if you didn't know what product it was building? Would you buy stock in a company without knowing what they do? Crypto is no different. These aren't just coins. They're technologies, ecosystems, solutions to real-world problems. And if you don't understand what you're buying, you're gambling, not investing. Understanding the basics, what makes Bitcoin secure, what Ethereum smart contracts enable, what makes Solana fast, or why Chainlink is important, gives you an edge over 95% of investors. And it's not as hard as you think. You don't need to be a programmer. You just need curiosity and a willingness to learn. Spend time on YouTube, Reddit, white papers, project docs. Learn how blockchain works. Learn how to evaluate tokenomics, development teams, community support, and real-world utility. Because knowledge isn't just power, it's profit. Now that we've covered the myths, let's talk about what this really comes down to. All these misconceptions stem from one root issue: mindset. If you approach crypto with a get-rich-quick mindset, you will make emotional decisions. You'll chase hype. You'll panic during crashes. You'll follow influencers blindly. You'll ignore fundamentals. And you'll lose. But if you adopt the mindset of a disciplined investor, one who plans, learns, and acts rationally, you'll thrive in this space. The truth is, crypto is an incredible opportunity, but it doesn't reward hope. It rewards strategy. You don't have to be first, you just have to be smart. You don't have to time the bottom, you just have to have a thesis. You don't have to understand every line of code, but you do have to understand value. Crypto isn't a lottery ticket. It's a tool, and tools don't build wealth. People do. The question is, are you ready to be that person? So let's summarize. 5 myths you need to stop believing. Crypto is easy money. It's not. It's a battlefield, and winning takes skill and patience. If you missed Bitcoin, you're too late. Wrong. There are always new opportunities for those willing to research and think long-term. Volatility is your enemy. Actually, it's your best friend, if you know how to handle it. Elon Musk controls the market. Nope. He influences it, sure. But you control your decisions. You don't need to understand the tech false. Understanding gives you clarity, conviction, and confidence. Now it's your turn. Which of these myths were you believing? What mindset shift are you going to make starting today? Drop a comment and let's start a conversation. And if you're serious about taking your crypto game to the next level, make sure to check out our next video, where we break down the single most underrated strategy in the entire crypto space. If you made it this far, thank you. Don't forget to like, subscribe, and turn on notifications for more insights from Crypto Cortex, where smart money meets smart minds. Until next time, think long-term, stay rational, and own your future.